Okay, dear students, in today's class you are going to learn how to pass the journal entries when the company issues shares to the public. Here simple problem is written on the board. Just we'll go through it and try to understand what is given here. After that we can pass the journal entries. Okay, let us see what is given here. Tata Company Limited decided to issue 20,000 equity shares of rupees 100 each. Value of share is rupees 100. And how many shares company is planning to issue or company is planning to sell? 20,000 equity shares. Payable at rupees 25 on application, 30 on allotment, 20 on first call, and the balance as a second and final call. Here company is going to collect this rupees 100 in different installments. As application money, it is going to collect rupees 25 per share, and as allotment money, it is going to collect rupees 30 per share, and as first call money, it is going to collect rupees 20 per share, and the remaining balance, it comes to how much? 25 plus 30, 55 plus 20, 75 it comes, but value of the share is rupees 100, right? That is why here remaining balance, that is rupees 25, is to be taken as the second and final call money. Here total 4 installments are there, through which company is planning to collect the face value of the share. Company received applications for 23,000 shares. Company's plan is to sell 20,000 shares, but applications have come for 23,000 shares. But company is not going to allot 23,000 shares because company's decision is to sell only 20,000 shares. That is why here board of directors will decide what to do. Here let us see what is given here. The directors decided to reject applications of 2,000 shares. Here excess shares demand is there by the applicants. Whatever the application money is collected from these applicants will be returned to them along with the letter of regret. You have already studied that there are two important letters which are sent to the applicants in case of issue of shares. One is the letter of allotment, next one is the letter of regret. Letter of allotment is sent to those applicants whose applications are accepted and shares are allotted, and next one is letter of regret is sent to those applicants whose applications are rejected. But along with this letter of regret, whatever the application money has been collected from such applicants will also be returned. That is why here directors have decided to reject the applications demanding 2,000 shares. It means these applicants are going to receive whatever application money already they have paid to the company. And the excess application money on 1,000 shares was decided to adjust towards allotment. What is the meaning of this? Here sometimes what happens, some applicants might have demanded for more number of shares, but the company might have allotted less number of shares. That is possible. See, one fellow has demanded for 1,000 shares. Assume Mr. A has demanded for 1,000 shares, but the company has taken the decision to allot only 800 shares to him. Here, Mr. A has sent application money on 1,000 shares, right? And he is allotted only 800 shares. Whatever excess application money is here with the company will not be returned to Mr. A because Mr. A has already become the shareholder. That is why whatever excess application money is collected from such applicants will be kept with the company so that that amount can be adjusted towards the next installment. That is the meaning of this. Here company has kept the application money of 1,000 shares so that that can be adjusted towards the next installment. The allotment money was duly received on all the shares. It means full allotment money has been collected, but the final call money on 200 shares was not received. Here final call money was received by the company only on 19,800 shares. Why? Because it is clearly given that the final call money was not collected on 200 shares. Allotment money on 20,000 shares is collected, but the final call money was not fully collected from all the shareholders. Okay, pass the necessary entries in the books of Tata Company Limited. Okay, let us pass the journal entries. In the previous class, you have studied the different types of journal entries which we pass when company issues the shares. Here you write journal entries in the books of Tata Company. Particulars, here you write debit and credit. Okay, what is the first journal entry? Very simple thing. Whenever application money is received, journal entry is bank account is debited. Bank account is debited to share application account. Okay, how much amount is collected towards the application money? Just you see, the applications have come for 23,000 shares. That is why here company has collected rupees 25 on application. Rupees 25 per share is collected by the company as application money per share. That is why 23,000 shares into rupees 25, it comes to how much? 5,75,000 it comes. Rupees 5,75,000. Now you see, in case if applications had come only demanding for 20,000 shares, the company would have collected rupees how much? 25 per share means 5 lakh it comes. If the company had received the applications demanding only 20,000 shares, in that case company would have got only rupees 5 lakh as the application money. But in this case, in this problem, what is given? Here applications have come for 23,000 shares. That is why here application money collected is how much? Rupees 5,75,000. That amount we have to take here. 75,000 and 5,75,000. Write the narration being application money received. See, when application money is received, this journal entry is to be passed. Whenever application money is returned, that time reverse journal entry is to be passed. In this problem, what is given? The board of directors have rejected applications of 2,000 shares. It means here whatever application money is collected on these 2,000 shares is to be returned. That is why here reverse journal entry is to be passed now. Share application account is to be debited. Application account is to be debited to bank account. How much amount it comes? See, on 2,000 shares, you see 2,000 shares into rupees 25 per share. Rupees 25. It comes to rupees 50,000. This 50,000 is returned to the applicants along with the letter of regret. 50,000 and rupees 50,000. Being application money return to rejected applicant rejected applications. Simply write being application money returned. Enough. Can also write like this. Try to understand here. 5,75,000 was the amount collected by the company in the form of share application money. Out of that, 50,000 is returned to whom? To the applicants whose applications are rejected. 50,000 is gone now. Now with the company, how much amount is there? Only 5,25,000. Out of 5,75,000, 50,000 is returned. Remaining balance is 5,25,000. Okay. Next one is, what we have to do? We have to transfer the share application money to the share capital account. Okay. For that, what journal entry is to be passed here? Share application account is to be debited. Share application account is to be debited to share capital account. Share capital account. Here important thing is how much amount is transferred to share capital account. Here application money on 20,000 shares only is to be transferred to share capital account, because here application money on 20,000 is the actual amount which is to be shown in the share capital account. Because of that reason, it comes to rupees how much? Rupees 5 lakh only. Rupees 5 lakh and rupees 5 lakh being share application money, being share application money transferred to share capital account. Share capital account. See, these are the journal entries pertaining to the application money. Whenever application money is received, that time we pass the journal entry bank account to share application account. Whenever the application money is returned to the applicants whose applications are rejected, that time reverse journal entry we pass. Share application account is debited and bank account is credited. Next one is when the share application money is transferred to share capital account, only the amount which company had planned to collect as application money is transferred to the share capital account. Here company's plan was to collect application money on 20,000 shares only. Therefore 20,000 shares into rupees 25, it comes to rupees 5 lakh. This is transferred to share capital account. Next journal entry is with regard to share allotment. See, next one is share allotment. When share allotment money is due, what journal entry we pass? Share allotment account is to be debited. Share allotment account is to be debited to share capital account. To share capital account. Being allotment money due. Being allotment money due. Due entry we pass here. Allotment money has not yet collected. What is the amount of allotment money? Just you see here, rupees 30 on allotment. Rupees 30 on allotment. This will be collected only on 20,000 shares. Therefore, on 20,000 shares, it comes to how much? 20 into 30, 20,000 into rupees 30 per share. It comes to rupees 6 lakh. This amount we have to write here, rupees 6 lakh and rupees 6 lakh. Very simple thing. Next one is whenever allotment money is collected, that time what journal entry we pass? Bank account is to be debited. Whenever allotment money is collected, here we need to adjust the excess application money on 1000 shares. On 1000 shares, excess application money comes to how much? On 1000 shares into 25, it comes to rupees how much? 25,000. Here rupees 25,000 is the amount which company is not going to collect from the shareholders. Why? Because already 25,000 is there with the company. That is why remaining amount will be collected from the shareholders. That is the meaning. Here rupees 30 per share comes to rupees how much? Rupees 6 lakh. But company is not going to collect again rupees 6 lakh from the applicants. How much amount will be collected from them? See, 25,000 is already there with the company. Only 5,75,000 will be collected from the shareholders and rupees 25,000 will be adjusted by the company from the share application money. Okay, that is why here bank account is to be debited. How much amount company is going to collect? 5,75,000. 5,75,000 and rupees 25,000 will be taken from where? From the share application account. You see here, out of 5,75,000, 50,000 is already returned. Still 25,000 extra amount is there. This amount is to be adjusted in the installment money. That is why here share application account is to be debited. Share application account is debited with the amount of rupees 25,000. Next one is you write to share allotment account. Share allotment account. Now total amount comes to rupees how much? 6 lakh. Here you can write being share allotment money received. Money received. This is the way how we have to pass the journal entries in case of allotment. You remember here, whatever excess application money is there with the company, that will be adjusted. Here only 5,75,000 will be collected from the shareholders as allotment money instead of rupees 6 lakh, and whatever rupees 25,000 is there with the company which was collected at the time of receiving the applications will be adjusted here. That is why 25,000 is adjusted to the share allotment amount. Now the total comes to rupees 6 lakh. Then after this, we go to the call money. When call money is due, for that we pass the next journal entry. When call money is due, here what is the journal entry? Share first call account is to be debited to share capital account. To share capital account. Practice is very important. Try to remember the entries here. Share first call account is to be debited. What is the share first call amount? You see, rupees 20 per share is the first call money. That is why rupees 20 into 20,000 shares. It comes to rupees how much? 4 lakh. That we have to write here. Rupees 4 lakh and rupees 4 lakh. This is the due entry. Being share first call money due. Next entry, share first call money is received. Journal entry is bank account is debited to share first call account. To share first call account. What is the amount? Again, rupees 4 lakh and rupees 4 lakh. Simply you write the narration. Being share first call money received. Very simple thing. These are the entries in case of first call. Next one is in case of second and final call. How much it comes? I told you that 100 is the par value, and how many installment money is given here? Application 25, allotment rupees 30, and first call rupees 20. It comes to rupees 75. Out of 100, 75 is given here in the problem, and remaining balance rupees 25 is to be taken as the second and final call. That is why when the final call money is due, that time we pass the journal entry like this. Share second and final call account is to be debited. Final call account is to be debited to share capital account. To share capital account being final call money due. Being final call money due. How much amount it comes? So you see 25 per share means into 20, it comes to rupees how much? 5 lakh. Right, rupees 5 lakh. Rupees 5 lakh. When final call money is collected or received, journal entry is bank account is to be debited with the amount received. Next one is to share second and final call. Second and final call account. Final call account. But here we have to enter the amount which is actually received or collected by the company. In the problem, it is clearly given that on 200 shares, the final call money was not received. It means out of 20,000 shares, 200 shares call money was not collected, final call money. That is why only on 19,800 shares money is collected. That is why on 200 shares final call money comes to how much? Rupees 25 means it comes to 5,000 rupees. 5,000 less has been collected by the company. Therefore, 25 into 20, the total amount comes to rupees 5 lakh. But company has not collected rupees 5 lakh, but it has collected less than that. It comes to how much? 4 lakh 95,000. 4 lakh 95,000 is the amount collected by the company towards the final call. Being final call money received. Being final call money received. Very simple thing is there. Try to understand the concept. I hope you understood the concept. If any doubt is there, you can send the comment, and better share this video to your friends so that they can also get the benefit of this. Okay, thank you.